Now we calculation of this example Narad Limited, page number 74. Step number 1 for valuation of the goodwill. Step number 1 is required calculation of the capital employed. Step number 1, calculation of capital employed. What is formula of capital employed? Capital employed is equal to total assets minus liability. And total assets is first goodwill. Goodwill never to be considered in the at the time of valuation of the goodwill. So old goodwill is not to be considered as a total assets. So second, land and building amount of rupees 5 lakh. Adjustment number 1. Market price of the land and building is 20% more than the book value. Land and building %20 more than the book value. Book value is 5 lakh plus 20%. Answer is 5 lakh plus 20%. Answer is 6 lakh rupees. It means land and building market value is 6 lakhs. Second, plant and machinery amount of rupees 5 lakh. Amount of rupees 5 lakh. What is adjustment? Adjustment is the while that the plant and machinery is 20% less than the book value. It means less 20% less than the book value. So 5 lakh minus 20%. Answer is 4 lakh rupees. Next, 12% tax free government security, face value of rupees 1 lakh and market value is equal to 60,000. Investment. Amount of rupees 60,000, but this investment is to be non-trading investment though, so it is not to be considered at the time of valuation of the goodwill, and this is not included in the total capital employed because there is non-trading investment, so here it is not to be considered. Next, stock. Okay, stock adjustment number 2. Market price of the 20% stock is 20% more than the book value. Stock amount of rupees 2 lakh. Stock amount of rupees 2 lakh. Out of 2 lakh, 20% stock value is 20% more than the book value. It means 40,000 stock value is 20% more than the book value. It means total value of 40,000 stock is 48,000 plus remaining 80% stock value. It means 2 lakh multiplied by 80%. Answer is 1,60,000. Total stock value is equal to 2,08,000 rupees. Okay, next, debtors. Amount of rupees 1,50,000. If there is any adjustment available for the bad debt and bad debt reserve, that's time debtors minus bad debt reserve is to be net debtors. Next, cash and bank balance. Cash and bank. Amount of rupees 1,22,000 rupees. Okay. Next, preliminary expense. This expense is not considered as a assets because this expense is considered as a fictitious assets. That's why we cannot consider as the assets. Okay. Next, liability. Okay, liability. First, 10% debenture. What is 10% debenture? 10% debenture. Amount of rupees 3 lakh rupees. Next, current liability. Current liability. Amount of rupees 1,50,000. Next, employee profit sharing fund. Employee profit sharing fund. amount of rupees 50,000. Total assets is equal to, what is total assets and total liability? Answer is 14 lakh of total assets and total liability is equal to 3 lakh plus 150 plus 50. Answer is 5 lakh rupees. Okay. What is our formula of capital employed? Capital employed is equal to total assets minus liability. Here total assets is equal to 14 lakh rupees minus liability is equal to 5 lakh rupees. Our answer is 9 lakh rupees. Okay. Now minus less preference share capital. Preference share capital. Answer is our preference share capital is equal to 10% preference share, amount of rupees 100 each, fully paid up amount of rupees capital is equal to 5 lakh rupees. Again minus 9 lakh minus 5 lakh, answer is 4 lakh rupees. That is our capital employed. Now step number 2. What is it? Step number 2. What is step number 2? Expected profit. Expected profit. What is formula of this? Expected profit is equal to capital employed multiplied by expected rate of return. Expected rate of return. Capital employed is equal to 4 lakh rupees and expected rate of return, here there are two rate of return is given, 10% and 5%. Total expected rate of return is equal to 15 lakh rupees. It means 15%, and our answer expected profit is equal to 15% multiplied by 4 lakh rupees. Answer is 60,000 and 60,000 is our expected profit. Now calculation of step number 3. Okay, what is step number 3? Average profit. Average profit, adjustment number 4. Profit after tax at 50%. Profit after tax is given for the last 3 years, where rupees first year profit is equal to 1 lakh rupees plus second year profit is equal to 3 lakh rupees plus third year profit is equal to 2 lakh rupees divided by 3 year profit. Answer is 6 lakh divided by 3. Answer is 2 lakh rupees. That is our average profit. But from this profit, firstly less interest on non-trading investment. Interest on non-trading investment. Interest on non-trading investment amount of rupees. Total investment amount of rupees. Total investment. How much? Market value 60,000. Okay, 60,000 and 60,000 is market value, but interest calculated on face value. So our value is equal to 1 lakh multiplied by 12%. Answer is 12,000. And this profit is after profit after tax. That's why we also tax deducted from the interest on non-trading investment, tax 50% tax, or amount of rupees 6,000, and total net interest is equal to 6,000 rupees. 2 lakh less 6,000, answer is 1,94,000. Okay, again less preference share dividend. Preference share dividend. Okay, how much preference share dividend? Total amount of preference share capital is equal to 5 lakh multiplied by 10%. Answer is 50,000. 1,94,000 minus 50,000. Answer is 1,44,000. It's our average profit. Okay, now step number 4. What is step number 4? Step number 4 is equal to what is super profit. And what is formula of super profit? Is equal to average profit minus step number 2 expected profit. Expected profit is given. Find out the expected profit. Okay, average profit is equal to 1,44,000 minus expected profit. We have a calculated of amount of rupees 60,000. So that's our super profit is equal to 84,000. Now step number last, it means fifth step. Step 5. Okay, what is our target is find out the valuation of the goodwill. It means last step is equal to goodwill, and goodwill's formula is equal to super profit multiple by year of purchase. Because in this example mention the methods of super profit of the company, that's why use of this formula. Super profit is equal to 84,000 multiple by year of purchase, that means at the 3 times of the super profit multiple by 3, and our answer of the goodwill is equal to 2,52,000 rupees. That is our goodwill.